Investment of the week. This is the investment of the year. They just changed the game. What's going on, everybody? Crypto Kid here, coming at you guys again with another video. This is like my 10th take of this intro because I'm just so excited about this project. Been in crypto for 3 years, and I think this is probably my favorite one. Based on what I've seen, you guys are going to see why. Let's get right into it. So, imagine a world where you can receive a self-repaying loan that you can spend and save at the same time. So, Alchemix is reimagining DeFi by making this concept a reality. So essentially what's going on, I know this is confusing, but what I like to think of it, you're basically getting an advance on interest. So as you're seeing here, you deposit your collateral and then you're able to take out, it's 50% really. So if you invest $100 into this protocol, you can automatically withdraw $50. Go ahead, do whatever you want with it. Probably invest it into other cryptos. And then what happens is that yield is earned by your collateral from your finance vaults, and this automatically repays that advance over time. So this is definitely pretty interesting. A couple red flags, a couple questions coming up, but rest assured we are going to clear all of them in this video. This is not financial advice. Full disclosure, I do own ALCX coins though. So why take out a loan when you only have access to 50% of the money is a major question. The other question is, isn't the point of a loan to get more money? Well, the new concept that we're unlocking here is worry-free crypto investing. So there's no liquidations from loans. This provides the investor with a foolproof plan to risk-free investing, really. So a big thing, if this protocol can expand further, is companies coming in. Instead of that 1% that they're going to throw in crypto, it might be 5 to 10% if they can utilize this protocol, and this protocol can continue to upgrade and be more trustworthy. Because obviously, it's only been around since February 2021. As far as I can tell, so there's not a whole lot of trust in it yet. It's going to take time. It's not a red flag of any sorts. Obviously, with the new project, you're not going to ape in right off the bat. So, but this is one that companies could utilize in the future without having to worry about it. The only thing you have to worry about really with this is inflation, because this loan's probably going to be paid off over like 8 to 9 to maybe 10 years, and then you just get all your money back. So obviously, the US dollar, the way it's going right now, there's a lot of inflation right now, or any currency for that matter. There's a lot of inflation going on right now with everything happening. But I mean, when you can just immediately get your money up front, 50%, if you go ahead and invest that into a project that you love, but that's a little risky, and then you make a bunch of money off of it, you can turn around and immediately pay off that loan without even worrying about it. So you don't have to wait 8, 9, 10 years to get that money. But like I said, risk-free investing, fantastic concept. I never even thought of it before. But where can you buy Alchemix exactly? Binance, Coinbase, FTX, Gemini. And for a coin with a market cap of only $309 million, that's incredible to already be listed on those exchanges, especially. Fully diluted market cap is $504 million, meaning that the circulating supply right now is about 61% of the total supply. Let's go ahead and just double check that real quick. Yeah, 61% of the circulating supply. So this is somewhat of a concern for investors because, you know, maybe they could dump some ALCX onto the markets, but no. ALCX, once again, comes in clutch, and they've already thought about that for us. So they've completely outlined in their white paper how exactly they are going to release ALCX onto the market. Of course, the people behind the project have to get paid for the work they put into it. But they outline it right here for you guys, so you can pause and read this. But to sum it up, basically over the next couple of years, they're going to keep lowering how much ALCX they're releasing over time. And after the 3-year mark, they're going to have a flat emission of 2,200 ALCX tokens per week to support ongoing needs for incentivizing ecosystem behaviors. So I'll probably link this white paper in the description if you guys want to read further, but that's basically the sum of it. So we're going to turn to an interview with the Scoopy Trupples. Very interesting name, I must say, who's actually the founder of Alchemix. So first thing I wanted to point out is down here. It's right here. So one of the cool things that happens with this is that if we have ALUSD and we only take stablecoins as collateral, and we assume that a stablecoin equals $1, then we don't have liquidations. We don't need to have liquidations built into the system. So people can take out the max value from their position and not ever have to lose a night's sleep over a sinking feeling that the market is going to tank. So this is what happens in a lot of other lending protocols, is that you have to worry, oh no, like what if my collateral tanks and my position gets liquidated? So that's why a lot of people don't use these crypto loans right at the moment, because they're worried that this market, this volatile market, is just going to totally just destroy their portfolio, and all the money they're going to put in is just going to disappear. So this this solves yet another massive problem in the space. And on top of that, interest-free borrowing, huge. You don't have to worry about paying Alchemix a dime for any of this, besides fees for just setting your crypto in, obviously, through DAI. So fantastic. On DeFi Pulse, you guys can also check this one out, just DeFiPulse.com. It shows you the TVL for all the DeFi coins across every space. This is a top 20 project already. There's already $736 million locked into Alchemix. So just phenomenal across the board. Absolutely fallen in love with this project. The all-time high in the last 365 days is $2,027.45. The low over that period is $180. So decently high floor, very, very high all-time high. Honestly, I would be shocked if this thing does not 10x in the future, but just phenomenal. So scrolling further, we're just want to show you guys the system here. So just to re-explain it, you deposit the DAI, you can borrow up to 50% of the DAI deposit. Eventually this deposit is repaid and you liquidate using existing collateral. So utilizing Yearn obviously is a big thing. I honestly think that for this protocol to keep expanding, they're gonna have to get away from just Yearn, because I don't believe that that's the top project right now in DeFi by any stretch of the imagination. It's number 8 right now. So I know they mentioned Aave a lot in their projects. I wonder if they're gonna somehow utilize that. But going into assets here, Rari Capital or Ren. I know we talked about Ren yesterday. That would be interesting, some sort of integration there. But the other big thing is that they utilize Chainlink. So I wonder if we can go ahead and find that in the white paper here. Alchemix uses, so the problem we're looking at here is that AUSD would be backed by a basket of future yield from several stablecoins, and doing so it presents some additional risk if one of the supported stablecoins peg breaks. Without safeguards, users could exploit the system in a fashion that would allow them to essentially swap a token worth less than AUSD for AUSD. And to combat this, Alchemix uses Chainlink oracles of price feeds for the various supported stablecoins. If the value of a stablecoin is below a certain threshold, then minting AUSD, repaying with the base asset, and liquidation collateral will all be disabled. So this is good. They already have these defense mechanisms in place. And the thing I like about this is that all of the questions I had, they seem to have an answer for. This is a company that did their research. They're thinking of a lot of these problems ahead of time. And what they're doing is they're looking at mistakes that similar projects have made in the past, and they're making sure that they don't make them themselves. So, I mean, I think as a protocol, you just, at this point, got to be so confident in where it's going. And it's just, I don't know. It's phenomenal investment. I can't find any knocks on it. So, love the concept, love the protocol. Definitely going to be sending a lot more money into this one over the coming months. But let me know in the comments what you guys think. I would love to see you in the next one. Make sure to like, subscribe. Peace.